XNG USD. The natural gas is one of the widely traded commodity for several reasons. The first reason is a high global demand. Okay, the natural gas is a key energy source for electricity generation, right? So we're not going to that. So we just want to go into the practicability of how you could actually hedge on when you have liquidity problems, when you're unable to sight on the liquidity in the market. Okay, now remember in trading that you have the major type of liquidity, which is the equal high liquidity and equal low liquidity. The equal high liquidity tends to be like the rejection of prices at the highest level. Okay, when you have rejection of prices at this higher level, testing the same zone or testing the same level for several times, okay, over the last period of time. Now, in an hour candle like this you're seeing on my screen, you could see that there are tests of zones in this area, right? So we could equally say that this zone is the equal high liquidity, right? And if you're going to the bottom side, you can say this is the equal low liquidity from an hour candle. Take note that this is where we have the picture of what we are looking at. Okay, this is the picture of what we are looking at. All right, so now we've understand the equal high liquidity and equal low liquidity. The equal high liquidity is at the top, the equal low liquidity is at the bottom. Now, ideally, this is how you tend to know the trend. That is actually like a pattern of how the liquidity tends to flow. So if you have your demand from the bottom, you move to the top, then you have a consolidation form going this way, right? You test the top, bottom again, and you go down to take another form. So this basically is the equal high liquidity. Okay, you have two tests repeating itself several times. You have 1 year and you have the other 1 year. So from this pattern, when I enter a chart and I look at how the chart is coming from, like the trend in the past few hours, this is what I'm going to look at, because what I know is that this particular zone, this is the money zone, right? This is the money zone. Okay, what I mean is that this zone, everything here is a money zone. Whatever you do here is a money zone. So as a trader like me, like myself, what I need to do is, before I go into the trade, okay, I need to confirm something. Okay, and what I need to confirm has to be in this area here, this particular area. This is what I need to, this is where my confirmation needs to come from. The confirmation needs to come from, if I'm coming from an hour candle, right? I already know that the price at this point is not going higher than the previous price, because this is a point of liquidity. This is another point of liquidity, right? So the confirmation comes in when I set in the time frame into an hour candle, when I discover that there's been an upfront shift, then a retest of zones in the consolidation form, maybe in the Asian time frame, going top to meet up the previous highest price, right? So this zone, which is the money zone, right? This is the money zone we discussed. So I need to know if the price is still going to make a hit back to this point, or it's going to be a fall. So what I mean is that when I see the price taking a form this way, going towards this up form, then the consolidation to the top, then you have a fall. Okay, ideally I know that this is consolidation, right? So this is consolidation. So this consolidation form. So I've gotten my equal high liquidity at this point. So the next thing I need is to sell, because this is a supply zone. Supply zone, always is the premium to sell. It's a premium place to sell. So when I hit my trade, to be from this particular zone here, you could have like a slopey sell coming this form and this form and this form and this form down to the bottom. Okay, that means I've already fulfilled the trade. So it's very important to take note of the liquidity. This is like an ideal way it comes, but it's not realistic in this way. This is how it comes. This is a realistic way that the equal high comes. Okay, you can see from this point, there's another test here. There's another test here. There's another test here. Test here. And test here. So you could see that the highest point of reversal of prices shows that the price hasn't gone past this zone since the beginning of February, right? And at the bottom part as well, this is the liquidity part as well. This is not support and resistance. This is just purely identifying the liquidity. Okay. Now, from the current price now, we could see clearly that the place that the price is yet to test is this point. This point is the point where the price is yet to test. Okay, this point, the price hasn't tested this point yet. And the current price is at 3.3090. So what we are looking at is that we have a little fair value gap at this point. Not a very good one, but at least have a little fair value gap here. So my prediction is that the price might take this part to fill up the orders in this point, the injected orders in this point, right? So if that is done, then there's going to be a retest to the upside. So, and again, if you look at this point here, you could see that there's a rejection of prices there. February 6, there's another rejection. February 6 around 3 o'clock in the morning and in the afternoon rather. And currently the price is at 3.3090. So there's also a rejection as at Friday 7 February 2025. So we could say that this can be a base of liquidity. This can be a base of liquidity. So it's not confirmed yet, but this can be a base of liquidity. We just want to be sure of where the price is trying to go. Ideally, this is where the price can retest because we've seen equal high liquidity and equal high liquidity. This is the sample of what I explained the other time. But in this form here, it's quite different because let's assume we're coming, not even assuming, we're coming from this point, right? Now we have a retest of down zone, up zone, down zone, up to this trend, right? Now we have another reversal going to this point, then we have another fall. So let me use this so that it could match what I drew the other time. So you could see here that this is a liquidity and the equal high liquidity. You can use the one I'm using the arrow for, or this particular one here, these two. You can use this and this and raise the bar up to be the equal liquidity. Okay, anyone is fine, but we have multiple rejections here, so we can just go with this instead, not to confuse us. Okay, so that's just how to understand the liquidity price volatility when it happens in the market. The natural gas have these demand spikes in the winter, for heating and air conditioning, so to create it kind of create these trading opportunities for traders to be able to anticipate the prices on where it's going to go, so that they can maximize their profit returns. Also, I want you to take note of the major financial data or the major economic data that comes out, which could affect the prices of natural gas. Okay, hedge fund, retail traders, financial institution tends to participate in the gas market because there is high liquidity, which ensures that the buying pressure and the selling pressure is quite high to make the attractive trading of natural gas to be possible. So, thank you so much for your time.